Now, we talk about this evolving U.S. China relationship. Has that impacted, business for GE in China?
Actually, I think it's been good for us. We've got a big business in China. We have, 20,000 employees. We've been working with Chinese partners along the One Belt, One Road. So we've changed our strategy a little bit and adjusted to reflect the importance of that initiative. So the relationship continues to be very good, and we've seen more opportunity.
So fair to say 110 days since Trump took office, have you been more encouraged by the tone from the administration?
Well, I think the administration is listening, and they're encouraging companies to speak up. They're creating opportunities for us to do that, and they're paying attention to what we say. So yes, I'm encouraged.
Let's talk about GE specifically. I mean, you recently had discussions with an activist investor who wanted GE to be more cost-conscious, to go on a cost-cutting spree. Has that changed operations in any way? What's being done differently at GE now?
Well, I think we've always been cost-focused and cash-focused. All of our investors have encouraged us to kind of raise the bar a little bit, and we're doing that. So I think that the perspective that we get from our investors, including Trian, is a very good perspective, and we've tried to incorporate that into our strategy.
Share with us how you're doing things differently. What cost-cutting measures have been implemented?
Well, we're thinking more about where we have our corporate costs and the value that creates, and making sure that we're providing optimum services for our businesses and what we do around the world. And that's one of the responsibilities I have, to make sure that we're as efficient and effective as we can, and that everything we do supports the growth initiatives of our businesses.
Has the involvement of Trian changed the relationship between GE and the company? Has it soured in any way? That's what some analysts are saying.
No, I think it's been very constructive, and it continues to be constructive.
Now, John, what's interesting is that GE has spent about $1 billion buying into 3D startups. I mean, what's the thinking? What's the strategy going forward? I mean, why are you betting big on 3D printing startups?
Well, we think 3D printing or additive manufacturing is the wave of the future. And so we want to be in the technology from the ground floor. We've created a business around it, so our work will support our own facilities and our own manufacturing activities, and also other companies.
What's the overall strategy? If you have to give maybe a 5-year plan, what's the look of it?
Well, we think there is tremendous growth in external revenue, and we think we can generate a lot of productivity using 3D printing in our own manufacturing operations. So from an internal and an external perspective, we think it's going to be a home run.
So in terms of growth strategy, are you looking for more acquisitions in the space?
There probably are a few bolt-on acquisitions that we could consider, but we think that what we have invested in gives us a tremendous foundation to start with.
One important area for GE is oil and gas, and the oil and gas slump has hurt GE for more than a year now. Is there an end in sight? I mean, have we seen the worst? Have we seen the bottom to that cycle?
Well, our orders in the first quarter grew at about 9% organically, but that's up from a low base in 2016. We think that the market will start to recover. It's been worse for a little bit longer than we thought, but it's still a space that's very important to us, and one that we expect to grow over the long term. And as you know, we expect to close the Baker Hughes transaction in the middle of this year, and that gives us a much broader footprint with which to create value for our customers.
But how will the Baker Hughes deal position GE in a better way in the market?
It gives us capabilities that we haven't had before, and really gives us a full range of capabilities so that we can do more to support our oil and gas customers. And they've been very enthusiastic about our combination with Baker Hughes, because they like the idea of dealing with fewer, bigger partners.
Isn't it true, though, that there are still several regulatory hurdles to clear before the Baker Hughes merger can take place. Where are you in those discussions?
Sure, we're working through all the remaining areas where we have regulatory clearances. We've accomplished a lot. We have a few left, but we think that the deal will close at the middle of the year.
When you take a look at the global economy, I mean, people talk about risks involved, for example, in China. For GE, what are the biggest risks for the business?
Well, you know, when you look at our spread of businesses, we're in 180 countries. We can always see pockets of risk on any given day, in any given country, in any given business. But in general, you know, we see a global economy that's growing at a reasonable rate. We see lots of opportunities and a big demand for infrastructure. That hasn't changed in a long time. So we see far more opportunity than we see risk.
Globalization alive and well, you think? I mean, we talk about a U.S. that's retreating, but also a China that's spreading its influence in a much bigger way.
In some respects, globalization has become a bad word. You know, we are a very global company. We are globalists at our heart. We've got to do a better job of explaining to people why global trade matters and why the work that we do in the Asean region, you know, is good for the region and also good for our activities in Europe and the United States. So we support jobs in a lot of places because of what we do in Asia.
Where do you see the most growth within the ASEAN region?
We see growth in every country. It's one of our highest growing regions and has been for a number of years. Healthcare, aviation, energy, all platforms that should grow over the next few years. And we think oil and gas will come back, maybe slowly this year, but over time more aggressively.
The bet is on, John.